Despite the wild stock market swings, investors remain bullish. Joining us now to discuss is Investopedia's editor-in-chief, Caleb Silver. Caleb, good to see you again. So you are out with your investor anxiety index. And when I was going through it, I don't know, I was a little surprised to find the number one concern for investors right now is the election, even more so than COVID-19.
We were surprised to see that as well. This comes from our investor reader survey of our newsletters. So we have about 500,000 daily subscribers to two of our newsletters, surveying them since this crisis began, Alexis. And what's very interesting is that even though the market has raged higher, except for the last few days, they remain bullish, but they are fearful. That fear changed just in the last couple of weeks, as now they're concerned about the election, yet they're not doing much to their portfolios about it. They just feel like that is this looming cloud facing investors about 6-7 weeks away right now, and they feel like that's going to do some cause some turbulence in the market. We're seeing the turbulence, but I can't say that we can identify it's because of the election now, broadly speaking. But they are very anxious about that, yet still leaning into their favorite stocks and leaning in, especially younger investors, to buying more and adding to their positions.
Caleb, boomers, what are they doing right now?
Boomers are kind of hitting the brakes a little bit. I think that older folks who have seen some market ups and downs in the last decade or two know that it gets pretty choppy after a very steep rise, after that very steep fall we had. So this, if you map what's happening in the market right now to 2009, 2010, guys, as you know, it looks very similar. We went down pretty quickly, bounced pretty fast, and then there was a period of choppiness while everyone was trying to figure out valuations and whether the economy was actually rebounding or not. Right now, that's a huge mystery, even more so than it was in 2009. But I think older investors are pulling back a little bit. They're sticking with some dividend stocks. They're sticking with some of the stocks they've held for years, but not taking on new bets in new areas.
Now, this could be a little bit scary, Caleb. The index found 80% said that they are changing their investment approach. What does that mean exactly?
For most of them, especially the younger investors, it meant that they were going to stick with the winners and lean more into some stocks that they have already made a lot of money in. For older investors, they were pulling out of some of the long-term holdings that they had, and even some of the dividend plays that they've been holding on for several years. We have readers that have been with us for 10, 15 years, and these folks have been holding a lot of the same dividend-paying stocks. They're going to release some of that, take some cash off the table, and watch this cycle play out, because I think there's a lot of uncertainty, especially for folks that have seen markets ups and downs over the last couple of decades.
Okay, the number one concern listed in this poll or survey is the presidential election. It's straight ahead. Why do you think we haven't seen more selling in the markets?
I think there's a lot of uncertainty about who's going to actually be in the White House after November 3rd or next year, I should say. So I think that's part of it. Also, even if we do have a change in the president, there could be a lot of traffic and a lot of congestion still in Congress and the House getting bills done. So usually whoever wins the presidency doesn't make that much of a difference in the markets. It's usually the broader makeup of who's in the White House and who's in Congress and who's making the rules. So I think that they know that. Also, we're still facing a ton of uncertainty as it relates to the pandemic, what the economic recovery looks like. Is this a jobless recovery? Is this a recovery with only the big tech stocks and the big stay-at-home stocks? Or is this going to be broad-based, as we started to see a little bit last week?
What about people's anxiety around things like their own debt and credit card debt, things like that? Where does that stand right now?
That stands pretty high. So we have our anxiety index, which tracks our readers' interest and search activity to fear-based terms. So we track that across markets when they're looking at things like bear markets, corrections, et cetera. We track that across the economy for things like depressions and such, and for personal finance issues, foreclosure, bankruptcy. I will tell you that there has been a spiking interest in terms like foreclosure, forbearance, bankruptcy in the last couple of months. And that seems to have accelerated even recently as folks are a little bit more concerned about their personal finances with no new stimulus bill on the horizon and this uncertainty facing all of us over the next several months.
Okay, we've seen this tremendous run up in companies with unproven histories, Tesla, Nikola, many like it. If I were to go on your site, where should I go for help to help understand how I should evaluate some of these companies?
Great question. So we've been doing a series on how X makes money, how this company makes money, how Tesla makes money, to show people, to give them a breakdown of where the company brings in its revenue, where it spends its money, how much it spends on marketing, to give them a real look at the fundamentals. So you can look up your favorite companies and ask how they make money. You'll come to Investopedia, and we have articles that show you how to do that. But just also learning fundamental analysis and looking into these companies' ticker pages. You have great ones on Yahoo Finance. We have some ones that we're rebuilding that show really what these companies look like under the hood. Investors may not care, may bid these companies to the next galaxy and beyond, but actually understanding what's going on inside them is very interesting. And then you look at the valuations of a Tesla versus a Volkswagen versus a Ford or a GM, and you have to scratch your head sometimes.
You certainly do, which leads us to all this overvaluation we're seeing in the market right now. And it looks like your readers do believe, the majority of them do believe the market is overvalued, yet they are still staying in this market and they are still bullish, right?
Yeah, as you guys know, sometimes we use that expression, Tina, around here. There is no alternative. Well, these are investors who are active investors in that they come to Investopedia, they have portfolios. Many of them have portfolios over $1 million or more, and they know that there's no yield anywhere else right now. And the Fed has pretty much spelled it out for the rest of us. Interest rates are here for a long time. Stocks are the only game in town. Don't know which sector necessarily, but many of them are leaning to the ones that have won so far. IT, tech, internet communications, now healthcare. We're seeing a lot of movement into the healthcare industry as they're looking for more upside even after this run we've been on.
Caleb, are you getting any sense, while people are coming to the site, they're searching for knowledge, but we have seen a tremendous run up in stocks. Have you gotten any sense that they're getting complacent, that they're not doing the due diligence and the homework they should be on stocks?
Well, we're always looking to see what they're looking up beyond the anxiety index. What terms are popping anyway, and what does it have to do with what's going on in the news right now? I was just checking it out. Gamma has been huge, as there's been so much activity in the VIX and the future options market. People are looking for gamma, that separation between where the options are trading and where the securities are trading. People are looking up VIX ETFs to see if they can play the volatility by buying ETFs, which is very possible, and you can also buy the reverse. And they're looking up things like bull trap, which shows you that they're seeing that there's been these
Bull
runs,
trap. All right.
Yeah, bull trap, which are these runs inside what could be downtrends in the market. Are these bull traps? Are these fake outs? So they're pretty engaged in what's going on. That said, we know that there are a lot of people, and I was just reading an article in Yahoo Finance about a lot of new investors trading with leverage. That's very dangerous right now. We don't want to see people get burned.
I want to go back to Tesla just for a moment, because we saw the stock drop big, had its biggest one-day drop ever the other day, down 21%, partly on news that it was not included in the S&P 500. A lot of investors were banking on that. Why do you think it wasn't included? And do you think it's just a matter of time before it will be?
Yeah, I think I was surprised that it wasn't, and probably not as surprised as Elon Musk, but I was surprised that it wasn't, because it is proven, though you may have to look inside the details of its quarterly track record for profitability, but it is so widely held right now. The problem is it's so widely held by institutions and it's so widely held by retail investors that if you added it, I guess there would have been another huge run after that split. There is something to be said for this oversupply of a stock that is very hot right now, but there is so much supply right now, and investors, especially new ones, don't really realize stock splits don't generally lead to higher stock prices. It did immediately, but over the long term, that doesn't necessarily lead to increases. It takes quite a few years for that to catch up.
All right, Caleb Silver, editor-in-chief of Investopedia. Always good to see you.
Thanks for having me.